Hello and welcome to the Fibonacci free video for Friday, November 4th. This is David Starr and I'll be taking a look at Apple with you here this evening. Now, one of the reasons why I'm focused on this name is it is very well represented in many of our indices, in the S&P 500, in the NASDAQ 100. And while those indices have been selling off this year, and Apple has too, down from its all-time high, Apple has fared a lot better than the indices as a whole and many of the other constituent names in them. And I'm wondering if that's about to change. And to look at that, I'm going to look at the voodoo lines and the voodoo line roadmaps for this name, right? So the most important level in the voodoo lines indicator is the fire line. There are relatively few of these fire line levels, and there's one up here at the all-time high. These levels were here long before price ever reached this all-time high. They stay durable for many years. And what we generally see, one of the things that makes them more important, a level more important, is we generally see more important swings at the more important levels. And as we gauge the extent of the decline from that most important of the levels, the $180.65 voodoo fire line, we want to see what happens at the second degree levels. Those are going to be our tree lines. One here at 154.70, which we pushed up to really just about a week ago and failed and came back down. That move back down has had some interplay with this 138.67 tree line, right? That's a level that has come back into play back here mid-year, right? Again here in September and October, when the market made its low, when the indices made their lower low on October 13th, Apple didn't get back below its June low. It held above, and while it briefly visited below this tree line intraday, it finished back up and closed above. And as we've said, more important swings tend to happen at more important levels. And so therefore, I'm focused on whether Apple can regain this tree line. If so, it may be making a more important swing. But if it really pushes below 138.67, then that may be an indication that Apple is maybe starting to fail to hold up better than the market as a whole, and maybe starting to head back down. So I'm particularly interested in this level. We closed ever so slightly above it here yesterday on Thursday. Today we broke below and came back up to close ever so slightly below it. So no clear decision yet, but so long as it stays below, we have to give an edge to the downside. It's a very slim edge because it could be removed very easily with just a little tiny bit of buying. But I am going to keep watching that 138.67 level. Now, when we were more significantly below that level back here in June, you could see we made it to 1 degree of line below the snow line here at 128.75, and that's what propelled things back up. What would be a more significant indication that things were heading down and pushing away from 138.67 to the downside is if we could get below 128.75 and find resistance below that level to hold below it. If so, as I said, that would warn that Apple was perhaps preparing to plumb deeper depths. Hey, David here with Simpler Trading. Thanks for taking a few minutes to watch this video. I hope you found it useful. And if you did, please help us out. Click the like button. You can also add your comments below. We love to read those and respond to them. You can also click the bell icon. That will alert you whenever we have new and updated videos. And if you want to watch us trade in real time with our own money, you can visit simplertrading.com to learn how to sign up. Until I see you again, as always, good trading, and we'll see you at the next video.